Good morning, traders. Welcome to the TMT stock market strategy video on crude oil. All right, so welcome to the new year of 2017. I'm putting out a series of three videos. One was on the index, one is going to be on crude oil, which is this video, and next will be on gold. I do think that these three videos are going to help you really understand the technical view of these three, of gold, oil, and of course the index itself, and where we may be headed. It's going to be an exciting 2017. It's going to be lots of volatility. Last 6 months of 2016 were pretty much quiet, other than a Trump rally that we had. So for day traders, you always got to look for opportunity and try to find the high probability trade. And that's what we try to teach here at TMT, and also doing our research reports. It's very important to understand the concept and dynamics of how a sector or an indicator or a commodity, how it works, and what's their characteristics behind it. Because each stock, commodity, index, whatever name it, they all have its own characteristics, and something that you guys need to understand. So crude oil, let's get right into it. One of my favorites to look at, to do the analysis work, to trade. Same thing with gold. We always like to start off with, and this is what I look to do as a technical analyst and as a trader, to see where the money is flowing, what are the smart money is thinking. And the commitment to trade reports, as you guys know that follow me and get my report, you see the crude oil here is commitment to trade reports. There's two. There's three. You have the large speculators, you have the commercials, and you have the small speculators. Well, small speculators, don't even bother looking at that. Large speculators are, in this report, dumb money, and the commercials are the smart money. Now, there's two caveats here. The large speculators, when you have a small tight range like this, they tend to trend. So picking up off of a large speculator is actually also a good thing, by the way. It's not that you don't want to look at them. It's that when you have extremes like we have here, this is something that you do not want to be following the large speculators, because they usually are wrong. Okay, why? Well, as of right now, this report have the commercials the most shorted all year. Okay, the most shorted all year. Now, it's not a timing tool. Remind you, please, this is not a timing tool. But for the last 3 weeks, they've been the most short of all of 2016 crude oil, right here at 55. So that is telling me, as a trader and a research analyst, technician, that you have to use caution, because they are hedging what they take out of the ground. So whatever oil is being drilled and taking out of the ground, they're hedging at the current price of oil, which is 53 and change, I believe. But that's where you have to use caution, because at any given moment, crude oil can roll over again. And the OPEC ministers have already said 55.60 is more than adequate for the price of crude oil. But what happens is the shales, they will start coming online again at this area, say 53, 55. So how do you trade it? Well, the crude oil is a little different than gold, because there's a lot more headline risk, right? We have the OPEC members, non-members. You have the political conflict going on in the Middle East for years and years to come, and years that's been happening. So you have to use caution. Now, we had the meeting in Vienna, which they did cut. They said they were going to do a production cut, but we've had a couple of weeks of the API report, American Petroleum Institute report, that's reported on Tuesday after the close. And of course the DOE, Department of Energy, that comes out Wednesday at 10:30. They all had builds, so I think it might be a little too early, but we need to see what these reports will say, and if we start to get big drawdowns, then I think crude can probably go to 60. Now, I'm going to show you the chart, but this here is already a red flag for me. Okay, now let's add to it, right? Let's take what we have here on the crude oil, saying that we have the most of 2016, the commercials, the smart money, short, while the speculators in this report, the dumb money, are long at these lofty levels, right? So now let's just put this aside for a minute. Now let's take a look at volatility of the OVX. Well, right now here's USO. Okay, here's a tracking for oil. Not really giving us much, right? So, but we always want to look at that, so that's fine. So we take away that. Now let's take a look at crude oil here. Let's take a look at the money flow of crude. So here's WTI, right? Here's a 250-day moving average, and that's about a year's worth of trading. You can see that. So you could see that pretty much all of 2016, oil has been above the average, okay? And then if you look down here, and if I scroll down, you'll see, let me just bring that up, the accumulation distribution line was pretty much generally above 50. Actually, it was above 50 other than this little blip all of 2016. That's another big positive, right? So now we had our on-balance volume pretty much the same. Now let's take a look at chalk and money flows. Now, if you see here, we're at these lofty levels, all right, of the high of 2016. What's happening to the money flow? Money flow is starting to tick lower. Okay, money flow is starting to come out of WTI. So when you take that, and then you take this report where the commercials are short, that's an additional red flag for me. That will probably halt me looking to buy crude oil at the moment. Okay, now let's take a look at the chart itself, and then we could put it all together and sum it up. We have the monthly chart. Okay, now we have 63.59 is the 200 month moving average, which is huge and significant. Okay, and in this you have that we've had a pattern of higher highs and higher lows pretty much all the way up from 2002. Okay, that we've been up. Now, if we look at it, we're below it. Obviously, we smashed down below it around at the tail end of 2014, and we've been this way, down below this way. Now, can we get higher to $60, $63? Absolutely, we can. Okay, but I do think that the move is now being exhausted, and we might need one more catalyst to move this higher. And now we're just conversation, but we're going to get into some numbers. And the catalyst could be the confirmation that we are getting draws in our crude oil inventories, which would confirm that they, meaning the OPEC members, are complying to the production freeze that they agreed to in Vienna. Okay, very important here. Okay, that doesn't mean you can't trade or buy or sell for the day, but on the bigger picture where you want to make a lot of money, that's the big picture here. Now, as you can see, 55 is a very big number. You can see that here. We have huge supply distribution. So what I would say is last was on Friday was 53.72, and here is where if you're disciplined enough, above 55, you'll probably get to $63, $64, which would be somewhere right around here, right? $63, all right? Below and fail right here of 53, let's call it 53, you'll start heading back down again. Now, so above 55 on a close, okay, on a weekly close, all right, below the close of 53, so 53 and 55, so you got a $2 range. Now let me show you the daily chart, and I've showed this to you many times already. Here is an ascending triangle. Okay, the bigger picture of this really is a really complex inverted head and shoulders, and I didn't show this to you, and I don't want to really get this too far out, but it is a real nice, you can see left shoulder, head, right shoulder. This thing measures down to, believe it or not, guys, like 120, no, actually 110. Now, I don't have it on there because we haven't really broken out yet, and it is a complex head and shoulders. We had two left sides, two right sides, and then we got the head. The neckline is a slanted neckline, which actually did break out, all right? But I want to get a little bit more confirmation before I really start saying it to you guys. But that is another bullish pattern here, all right? Here's the ascending triangle, which that also measures to about 100, 105. From this area to this high, measures up to about 100, 105, okay? Now, we need to have this, this has to get going, all right? Let me just blow this up a little bit. This has to get going. But you can see momentum is waning. Our momentum indicators, oscillators are starting to roll over. We really can't break out of 55. 55 or 53. 55 we take out, and we have on a closing basis. Give it 2 or 3 days, and then ultimately you like to see a week above 55. And then what happens is you take out the swing high for that consolidation range. And so let me just kind of give it like this. Here is like a range bound trade, right? So here's your consolidation, your horizontal trend line, and let's just say that's a swing high. You want to have that takeout, swing high, and then start to move higher, making a higher low. All right. So that current swing high within that channel, which within this right here, is 54.51, right? So if we take out 54.51 and we can get above it and close above it for a couple of days, and then take out the high, then we're off to the races, and I think you see 60. All right. If, however, we start to break down, then I think you could see 45 much faster than you see 60. All right, and that's really what's going to come down to it in crude oil. So there are some caveats. What I'd like you to see is, again, just for a quick recap, let's keep an eye on crude oil inventories, the API number on Tuesday, DOE on Wednesday. If we start getting draws in our inventory, it looks like that they are complying to the production cuts. And if that is the case, that'll probably spark another rally to 60. Okay, if not, remember, commitment to trade reports have them short. They'll continue to get short even at 60. All right, and then I think that's where you could start looking for some sort of reversal. So 53 and 55. That's going to be your range that needs to close above or below to get a trend change. Within that area, it's nothing but noise, and that's when the day trader can come in and pick up some contracts to look to buy and sell crude oil within that range. And then once we get out of that range, whether it be to the upside or downside, then you can trend and swing trade crude oil. And again, you can go into the products. You can do the Baker Hughes, the Halliburtons, the Apaches. You can dial it down into the ETF and look at the top 10 holdings in that ETF, and then dial that down to maybe the top 2 or 5. Okay. Hope it helps everybody. Have a great day. We are going to have an announcement soon. We had a lot of requests for the research report videos that we're putting out. So we're trying to tailor the needs of everybody, and I decided what we should do, and we're working on it right now, getting it all together. You'll get an announcement next couple of days. Have a great day, everybody, and I hope everybody enjoyed their long holiday weekend.